we are actually going to speak about the budget speech from the property investor perspective.
You should never buy just because you're buying anything below transfer duty. So
For the middle class and the lower group, taxes have actually decreased, which means that more money will be actually coming to them.
the budget speed does have a direct impact towards property investing. It does have a direct impact towards cash flow. It does have a direct impact towards me paying tax.
Hey there,
Hello everybody, you are tuned into Nong. My name is Nell.
and my name is Lebu. Today we have an interesting topic. I'm sure you could see from the thumbnail, right? We are actually going to speak about the budget speech from the property investor perspective.
Yeah man, it's very important as a property investor to understand how does the budget speed affect my industry, or even as an aspiring property investor, how will whatever that was spoken about affect my business? Before we get into content, please do subscribe. Make sure that you did hit the subscription button.
And if you did actually find it informative, please hit the like. I'll keep on reminding you, hit the like, man. Let's go into it. So now, Neo, tell us, what were the things that you were looking forward to that would have changed according to you, but they didn't actually change?
Man, for me, it was the repo rate and the prime rate. I was asking myself, will it change or will it not change? However, fortunately, it depends on which angle are you looking at it. But I will say that fortunately, it did not change. The borrowing rate is still standing at 3.2, which is at its all-time lowest, man. So what does this mean, Lebo? If somebody's out there and they're saying, what does this mean? How does this affect my business? How would you say that?
So now this 3.2% generally means that it becomes actually cheaper for you to actually be buying property. What do you mean? Your rental income or the bond that you actually need to pay back to the bank actually become decreased. I remember with my bond, it was first at 4,000. Now I'm actually paying around 3,000. So now that 3% could be actually cut from what you were actually used to.
Yeah, man, that's awesome. Now, what I'm getting from your side is that the borrowing rate, to sum it up, the borrowing rate in terms of the interest that will be charged to how much I did borrow will become cheaper. So if I'm a cash buyer, how does that also affect me?
So now, as a cash buyer, you don't actually have a benefit towards that, because now remember, it's based on the lending rate. Lending rate means that you need to actually take out credit for you to be able to actually be a beneficiary of this particular 3.2%. But now, what I want to actually emphasize is that the 3.2% shouldn't be the main reason why you are actually buying this particular property. There are a lot of characteristics or a lot of things that needs to be actually matching your particular criteria in order for you to be buying this particular property. So now, if you are actually basing your purchase on the 3.2%, this basically means that should the interest rates actually go up again, that property of yours won't actually make sense. Make sure that the property that you are actually buying right now is not based on only the interest rates.
So now, Lebo, I'd like to understand from your side, man, what is that thing that didn't change that you're anticipating? There's a possibility this might change, however it didn't.
So now, I was actually anticipating that the transfer duty would actually increase. So now, I was thinking that it was going to sit at around 1.2 million. I think that would have been actually giving a lot of people more leniency, right? So now, let's first start by understanding what transfer duty is. So now, transfer duty is actually taxes which are actually paid on a property that's valued at more than 1 million. So now, if you are actually going to be buying your property at 1 million, relax, you don't have to pay transfer duty. But now, once it starts exceeding the 1 million, that's when you're actually going to be paying off your transfer duties. So now, what I was actually anticipating is that the transfer duty bracket would have actually increased to around 1.2 million. That would actually give people more leniency in terms of how much they'd actually need to buy. But that was not the case.
I would like to make a side note again that you should never buy just because you're buying anything below transfer duty. So as a property investor, if I'm not paying transfer duty, it shouldn't be, you know what, I'm not paying transfer duty, hence I'm buying this. There's so much more that you should be considering towards buying a property investor. And another clarity that I wanted to do is that there's transfer duty and there's transfer costs. It's very important that people understand the difference, because if you are buying a property that was previously owned by somebody and it's above 1 million, then you are going to be liable for paying transfer duties and transfer costs. So transfer costs refer to transferring from the previous owner to your name. And then now with transfer duty, those are levies charged on the property that's above 1 million.
I think that's a pretty interesting thing that you're actually raising, right? Especially for first-time home buyers. That I'm buying this particular property. I thought that it was listed for 850,000. That's the only amount that I would be paying. But now, not forgetting that there are actually hidden costs that you don't actually see as someone who's actually about to buy a property. So now remember, when you are going to be buying a property, you need to pay your transfer costs, as Nell has actually explained, and you also need to pay your bond registration. That falls under your transfer costs. And then your transfer duties are only for properties that are worth more than 1 million. So now, Nell,
and before we actually move on, it's very important for a property investor to also have a direct amount. Know before they actually buy the property, how much will they be paying towards transfer duties, because that is going to influence with regards to return on investment. Because with calculated return on investment, I need to understand my total investment on that property. So if that money will be coming out of my pocket and I didn't anticipate it, especially for first-time buyers, you'd be spending an additional 30,000 that you didn't anticipate. That might be a problem. So you need to actually understand this. So the budget speech was very important. It was very important, guys. It's not just one of those speeches whereby, you know what, I'll see how this impacts me. It does have a direct influence towards your property journey.
So now for the next one that we are actually about to speak about, right? These are the changes that actually happened within the budget speech. So now I'm actually about to touch on something that you need to actually go to your power team and ask them more about this, right? It's the tax side. Personal tax.
Okay.
So now please do go to your accountant and actually have a conversation around your personal tax, especially if you have rental income that's coming on a monthly basis. So now what has happened, right, is that for the middle class and the lower group, right, taxes have actually decreased, which means that more money will be actually coming to them. But now there's a certain bracket that if you do actually exceed that particular bracket, you are now going to start paying more taxes than you were previously. So now make sure that you go to your accountant, speak to them about what actually changed and how can you actually decrease your tax laws. Because now remember, there are actually legal ways of how people are actually decreasing their taxes. In terms of, like, if you are actually going to be buying equipment to improve your particular property, make sure that you go consult with your accountant so that they can actually explain this more to you.
I mean, why we actually introduced this one in particular is that, especially when you're buying the property on your own personal capacity. So when I'm buying my property under my personal capacity and not under the business, then I'll be charged on a personal note. So I need to be very cognizant, especially if, let's just say, I'm getting X amount, and then the rental that I'm getting, I got a good property, it's multi-let, there's so many people living on that property.
Great ROI.
Great ROI. It's making sense on paper. Now, there's a possibility that I can actually even shift to another tax bracket. So I need to be aware of that as a property investor. Last thing you want is that you shifting to the next column only to find out that maybe you'd find that at the end of the year or after 3 years, then you'll be like, when did things change? So it's very important as a property investor to consult, to have that power team, to always be understanding which tax bracket am I and what can I actually do to be tax adherence. What can I do to adhere to tax in a safe manner, and how can I grow my business simultaneously? So it's very important to understand the laws that are attached towards this.
So this is a basic summary of what we actually got from this particular budget speech that we were actually listening to yesterday. But now please make sure that you consult with your attorney. You also consult with your accountant to get a further understanding in terms of how can you start doing tax planning for next year, or how can you actually now start strategizing in terms of how do I actually decrease my tax bracket.
I mean, in summary, it's quite clear that the budget speed does have a direct impact towards property investing. It does have a direct impact towards cash flow. It does have a direct impact towards me paying taxes. So it's very important as a property investor to always be aligned with regards to any changes towards the budget speech, or just having that power team so that you can rely on them with regards to any changes that you can actually implement. So what you can also do is that if you do have somebody in your power team and you know that they're not assisting you with regards to your journey, especially towards the changes, then as a property investor, you need to be proactive towards that, because you don't want to be caught napping and then only to find out that when did things change, knowing very well that there was a budget speech on the 24th of February 2021. So best make sure that you are aligned with any changes. However, we did do our part, man. Hope you guys did have fun and you enjoyed it, man.
Most definitely. We really appreciate you. Thank you for subscribing in advance, and thank you for pushing that like button. Please do actually put down a pro below to make sure that you actually watched the whole video.
Where does pro come from? We're always telling our network that you need to invest like a pro with Nong. So this is just us making sure that everybody is investing like a pro and achieving their property goals, man. If you haven't checked out our website, www.nongwealth.co.za, please make sure that you do hit that, man.
Nong,
Signing out.